Yeah, guys, welcome to the session. Welcome to our third session on the free forex course. This session should be held midnight, so unfortunately I was attacked by something personal, so I couldn't be able to drop the session. So guys, today it's a level where we're gonna be starting to analyze like straight, because I even tried to outline the things that we're gonna be focusing on: banks liquidity levels, side liquidities, flip zone, order blocks. Yeah, simple like that. So guys, let's try to move and make it short. Let me share the screen so that you can be able to see it, the platform. So guys, I really love those who don't miss my sessions. If today you still remember, I made a live analysis, which I even posted on Instagram, YouTube, sorry. So if you check that analysis, it's been followed accurately. Remember, I made it, the market was somewhere around here, this level. I told you that it will buy until it activate our our bank's liquidity level, because we had three retests on this level that I've identified here, and then check what happened. It hit there, and then those who are in the VIP, I send a sell signal. So at the end of the day, they are all milking that. If we manage to win in this sell as a long trade, sell from there to here around this level, so our TP, it will be 90% away from the previous equal loops. So guys, this is how we do it. Do these things. I want you to be able to see these things. Okay, let me open that analysis, and then we'll compare this current. Yeah, so here we had before, and then the market refilled. So we're gonna leave those trades run for some time. So you see, guys, so I'm trying to give you accurate things like information, which many people they can't be willing to find, some for free. So if you check this level of trading, it's a professional trading, simple like that. No misleading each other there. So guys, check. NAS is still going to crash. It's still going to rally down. ET. So this is Nasdaq. I made this setup live analysis on the video. You can check it before and then check now. It's currently running smoothly and nicely. So get that session. We also had another thing about Euro GPD. So it's still selling too. So let's just with patience and try to identify some important things that we're going to learn today. So today, guys, I'll try to explain banks liquidity. And if you still remember, I'm doing a video where I've explained fully about bank liquidity levels, but then since many of you couldn't understand it, so let's try to focus. So okay, guys, bank's liquidity level. Remember, I'm showing you a bank trading course. I won't even show you something that I don't use. For now, I'll show you everything that I use so that you can be able to have the knowledge like me. Let's focus on bank's liquidity level. I want to identify. So I'm telling you, you won't go wrong. You won't go wrong. For those who love not missing my sessions, remember order flow, check. Order flow, check. The market went down, it rested, and then it continued rolling up. Simple like that. So, okay, bank's liquidity level. The moment the market is heading down, so the signal that you will have from the market, here's what I'm trying to say. So bank's liquidity level is this level. So this is a bank's liquidity level. It's a formation of equal highs. So a bank's liquidity level is not like support. It's more because the order flow that is against the bank's liquidity level, for it to be strong, we have to have a liquidity injection, a bank's liquidity level. So if you check here, guys, let me show you. If you check here, we had a long down run, and then we came and have something like this. I know a bank's liquidity form. So remember when we apply order flow, the first session of introduction to bank trading, that we know that banks, when they place trades, they don't place them same time, they split the market orders. That's all the biggest reason why we are having bank's liquidity level. So let me insert a line so that you can be able to see how the market makers drive the market prices towards small traders or retail traders. What happened during this level, on this level? Market prices were finally giving a signal that we're gonna have a reversal, a break of market structure or a rest of market structure, they want a downtrend or a downish run. Then check. We had first retest, we came ahead the second one, and then we came and had multiple retest 1, 2, 3 from there. I want to identify all of them. I want to identify all of them. So that you can see how market makers, they drive the prices. Check. What happened? We had how many retests, if we can count? We had 1, 2, 3, 4, 5, 6 retests on that level. So the moment we have these types of retests, remember the market makers, they're placing their trades via splitting their market orders. So now check what happened. Before the market prices traded off, we had what we call liquidity injection. Liquidity injection is something like this, sort of a false breakout. This thing, it's injecting liquidity in the market because it's acting as if the market is breaking below the level. So many traders, they will be obsessed when they see something like this. Many people will be selling, they think, okay, the market break while it's a false breakout. And this thing is there to also kick many traders out by hitting their stop losses, because all the people who were selling around, who were buying around from this retest, because we were having something like this, they think, okay, even here it will find support and then it buys. So unfortunately, it break through. So all those people who were selling, who were buying here, obviously their stop loss is set below, maybe somewhere there, or somewhere here. So at the end of the day, they are kicked out. And then if we check the market traded off away from that level, check how many pips. So many people, they got caught there. Others even said sell stops as their pending orders, thinking, okay, the market will break and continue selling. But unfortunately, those sell stops were webbed by the market. So they inject liquidity by creating a false breakout. So that's what we call liquidity injection. So now, why are we saying it's a bank's liquidity level, this blue level? The reason being is because you can see that, okay, market prices, they are now failing to continue with their market structure of going bearish, but check what happened. It went down. So order flow plus bank's liquidity level, it's a nice signal for you to be able to catch the market before it changes its trend. Remember my order flow, and then the market rests. And then from there, liquidity injection, and then it trades back, and then it consolidates, generating liquidity. Then from there, it continue buying labor. So this is how we call order flow. So now bank's liquidity, we're now trying to introduce bank's liquidity level by what? By drawing our level there. We know that this level is a level where the market prices will obey before it changes the previous structure. Then downtrend, and then rest by the ranging market structure, and then uptrend. That's how we do it. So by the time in this level, you see that, okay, the level is coming, the market is coming down from a downtrend, and then we have something like this, resting, introduction of ranging market structure, and then look for a liquidity injection so that you can be able to buy. If you check now, we had liquidity injection, and then by the time, for me, as I know that, okay, the market structure will break, I keep buying during this breakout. And then at the end of the day, you caught the market before it started bullish. So you check, this is how we manage to kill the bullish, the bank's liquidity level, because we know that the only people who are driving market prices during this moment is the banks. It's the banks. They are busy splitting their orders, so that many people remember the only thing, the main aim for us using the bank trading method is for us to be able to trade with the banks. So the banks, they know, okay, many people, they know that this is support. So what must we do to kick them out? We bring down the market prices below, and then check, they create a havoc, hitting people's stop losses and also activating sell stops here. And then at the end of the day, they bring back the market to continue with its upcoming structure. So that's how we do the introduction of the bank's liquidity level. So take notes of that. Then if you check now, it was a nice long entry there, bullish. So this is how so let's try to check another bank. Another one is here. So guys, I don't know if you can be able to wait. If you check now, check what happened. It was coming from a downtrend. Like what, this is a big downtrend. Down check. Remember, remember our order flow, guys. If you don't understand what is an order flow, it's a big problem. Downtrend, and then ranging market structure, liquidity injection, back to our ranging market structure, and then the price trades off with the bullish market structure. Simple like that. So if we check here on what I was identifying, let me show you. This is what we call it, downtrend structure, and then liquidity injection, and then trades back, the market trades back to a ranging market structure, and then the ranging market structure continues to give you one more entry. And then from there, guys, please, when you join this session, try to mute your mic, because next time from today, I'll just remove you because you're disturbing me. And then from there, what happens? Bullish market structure. So if you can be able to see this and understand this, hi guys, I'm telling you, you're going to make the market. You'll be coming to me saying, hey, I know you're powerful. So if you don't follow, then you'll just miss out of a downtrend. Here's a downtrend. Like what? Here's a downtrend. Here's a downtrend. And then this is introduction of a ranging market structure. Where's know what's the ranging market structure? And then liquidity injection. And then here's the liquidity injection. Here's it. I can even try to identify liquidity injection. And then the market comes back from the liquidity injection, continues with the ranging market structure. So it's just that I drew this in a straight line, but then it moves in waves, and then in waves, and then and then comes back, then it moves in waves, and then bullish structure, it goes like that, something like that. So if we check now, liquidity injection, and then back to continuation of a ranging market, and then after, it's our bullish trend. So guys, I don't know. Still, I no longer know if you can see this. Check. We buy. Then liquidity injection, you keep buying, then you come and buy again. Simple like that. Liquidity injection plus bank's liquidity level. This is a bank's liquidity level. Before the market continues giving you a bullish trend, what's gonna happen? It will give you a liquidity injection. And then here's our liquidity injection. Here it is. Entry. From there, it trades off. It trades away from the level. So like this is a simple snake. So now, let me show you how to trade these things. So now, guys, you know what is the ranging market structure. This is the ranging market structure. This is the ranging market structure. We don't sell, we look to buy. Even though you can see that, okay, we have multiple tests, you can scalp, but it's risky because the market sometimes guys, you see what I'm talking about. I'll end up removing those people who don't meet their mics, man. It's annoying. So if you check our ranging market structure, remember what's the ranging market structure? Is that market structure which moves in a zigzag, something like that. That's the ranging market structure. And then from there, check what? here you can see, okay, the market structure is being followed. And then also here you can see, and then liquidity injection, giving you a signal that you have to keep buying more, because we had a downtrend. So it's unfortunate for the market to have a big downtrend. You have to look for the opposite, or opposite, I mean. So then why I say don't keep selling here on this blue level that I've drawn here, because check what happened. You see, if you're still looking to sell, so you'll be left hanging out there. So you don't sell. So once this level is broken, we delete the zones, we delete everything. We now delete everything. Once a breakout, so we delete that level. We are no longer using that level because it's broken. So once it breaks, even if it comes back inside, you keep buying, knowing that it won't go below this blue level. Then it's a win. If you don't know what a win is what I'm showing you. That's a win. Let's look in a sell scenario. Because in a bullish scenario, I think I've managed to show you a lot of things, or let me identify another one that I'm seeing. So remember, always use a higher time frame. As if you can check me, I'm using an hourly chart. This is Euro GBP on an hour. Level, guys, if you don't see this, I no longer see. But true liquidity injection from there, traded off. Guys, I'm trying all my best. I'm trying all my best. I'm even tired of showing you how you don't see. In a day, you can get one of these setups. Identify the level, you extend the level, and then you had a downtrend, order flow application, order flow, downtrend, and then it rests, liquidity injection, and then it rests again, and then it trades off again. So don't ask me questions as like, hey, man, do you know what is a smart money concept? This is what I'm showing you. Smart money concept, simple like this. So you have to make your own setup. So I will try to create a template or a PDF to show you on the buy setups that you have to check on, and also sell setups using order flow plus a bank's liquidity level, including liquidity injections. Simple like that. So if you check now, we had one retest, two retest, we extend the level, we call it our bank's liquidity level. Bank's liquidity level, we're just showing that the banks will try to inject liquidity on that zone or level. Then liquidity injection, then from there, it's a win. So guys, if you don't know, I mean, if you don't see this, I give up. Okay, let's check a sell scenario so that we can move forward. Sell scenario. So bank's liquidity level lasts for some time. It lasts for some time. Nice sell scenario. Bank's liquidity on sell scenario. Here is it. Here is it. Here is it. Insert. Okay, let's take this level. Then we had one retest, and then what? Number two. Then liquidity injection. Layer one. This is what we call a injection. So unfortunately, we didn't manage to win prices from this level. And then it came again, created more retests, giving you a nice signal to show that no, the market liquidity, a strong liquidity injection. This was very strong. So then check from there. This is what we call liquidity injection. Then check. Layer one. Then check from there how prices traded off away. Layer one, simple like that. So this one, so in this setup, we had two liquidity injections. Two liquidity injections, 1, 2. And from there, the market price is traded off, level. So fortunately, we had two. But at the end of the day, what I'm showing you is working. Check how the market managed to trade off from that level. Simple like that. That blue level, liquidity, bank's liquidity level. And from there now, I'm moving to another second part. I'm no longer showing you bank's liquidity level and liquidity injection. I've showed you it's enough. It's enough. It's more than enough. It's more than enough. So let's check. The second thing is flip zones and side liquidities before go to other blocks. Guys, please, when you join the session, try to mute your mic, or else I'll remove you and block you. Or you won't be able to attend my next sessions once I block you. Okay, so now let's talk about other blocks. Let's check. Show you what's a flip zone, a nice flip zone. I want to show you what's a flip in here. What flip? What is it that is being flipped? Flip zone. Okay, flip zone is this thing. Let's use this level. I wanted a clear one. Let's check for a clear one so that you can be able to identify flip zones when you trade next time. flip zone here, flip or flipping something. So flip zones, you find them on every time frame that you can choose or you are willing to use. Zone, flip zone. No, that one was not strong. That one was not strong. So we use flip zones to get entries in the market. So flip zones, flip zones. Okay, yeah, here's a flip zone. Okay, let me not use a shape. Let me use this. What's a flip zone? Flip zone. Guys, the things that I'm showing you, they're too much. Flip zones. Flip zone. What's a flip zone? You can see, or you can even hear what's a flip zone before. Here, market prices, they were obeying this level oppositely. Then check. It's just that our having a nice one here. Then here's a flip zone. Now the market it's retesting oppositely. That's why we call it a flip zone. Opposite. Right one? Here it was okay. Flip zone, it's like when support it breaks, it becomes a resistance in simple ways. Then here it will oppositing as oppositely on a buy condition. Like what? Let's identify another flip zone that it's nice and clear. Here's a flip zone. So flip zones, you missed a breakout. Yeah, here's a nice clear flip zone. Don't ever text me and ask me, my guy, Ishmina, I didn't understand you. I hate people who don't attend sessions and then they come and ask me about something that I told. I'm not a robot. I won't keep doing the same thing each and every day. Like what? Support, it broke, it became resistance. So in case you call this level as a flip zone, simple like that. So you can be able to identify what's a flip zone. Even if I didn't show you, you can check it up on yourself or on resistance, check. Want the trade. So the secret, you sell in the flip zone, stop loss above the flip zone. Stop loss here. Don't not exactly check, not exactly here. Above, give it give your trades some air to breathe or space to breathe, so that the stop loss can be far away from the flip zone. Check. Support, broke, flip zone. Simple like that. And identify order blocks. Here's an order block. So order blocks, secret of order blocks, I'll have to introduce you what we call liquidity voids. So a liquidity voids are such runs like this. This is a bearish liquidity void. The reason being, we had a long down run. Check, a long down run. Only sell this liquidity as embarrassment. Okay, here's an order block. How do we draw an order block? We take from the start of this bullish lead before this starting a crashing run. It was a green candle. Where does it start? The green candle, here is it. And then we extend the level until further notice. The green candle started there. Check where my line start. Let me use this a bit bigger one so that you can be able to see. So this is where I identify my order block. So meaning the moment the market is crashing down, I don't chase it liquidity, and then from there it will start selling again because it activated my order block. So if we check here, you don't sell, you don't risk, you just relax. Order blocks, you only identify them and wait for much time. You can even wait for 2 weeks, 2 days, 3 hours. It depends on the time frame that you are using. So this is a 15 minutes time frame. Then check in order block. It came, or let me use 30 minutes. I lost where I was. Now I lost my order block. Yes. I don't even know which part I was at. Let's go back. I will get back there. We'll get back there. Order block. That was a very nice order block. So I don't want you to miss it, so that you can be able to identify more order blocks and understand what is an order block. Guys, I won't mislead you ever. So order blocks, you can find them on every time frame, but then preferred time frames for orders. Guys, now I missed my order block. I should have checked at the time. Another order block, but I don't know, should have been easy for you guys to spot. Another order block for you. So this is 0 GPP. It doesn't mean if I'm showing you with 0 GPP, it only works on 0 GPP. That you trade, as long as traded in the market, it works. But then remember the time frame importance. Time frame is very important when it comes to your trading. Imagine identifying order blocks on 1 minute. It's not unfortunate because 1 minute is very volatile and noisy. So anytime that's something that we can be able to use. I will end up identifying another one. It seems like that. Yeah. So guys, what type of witchcraft is this? I can't even find that order block. Your Forex has many candlesticks. Hey. So someone will be rushing to trade. Forex has nowhere to run. So let's trade with knowledge. Very dangerous. So okay, guys, how did I identify my order block? Took from the previous Greek candle. Okay, let me start again explaining order block. Check. We had it crashed down. If you check, it crashed down. Then from there, it came back. So the reason why we know that the market will come back, we can't have market participants, equal sellers, equal buyers, so the market can balance. So this is another reason why Forex is not going down in a straight line. It moves in a waves because of something that we call imbalance band, something like this. Check an order block. It could withdraw only this line, guys, is fine. You don't have to have many things. This line, and then you wait for the market to come back and refill the order block and activate. So it activates, you sell. So the moment it comes near this blue line, you keep selling, placing many sells. You place while it's here because mostly an order block is activated by a rejection. A rejection, we're talking about something like this. Something like this. So this is an liquidity, it's an injection, I mean, rejection. So what do you say stop loss if you sold there? You said stop loss from the previous high of that green candle that you take to identify that order block. Simple like that. Presence in our session. So that's how we identify order blocks. That's how. So, but then for other blocks, I know it's insufficient. I'll try to identify order blocks. So other blocks are there to be able to catch the biggest long runs in the market before the market crashed. So you can be able to identify order blocks. So guys, I'll make another session. Guys, please hold for me. This thing, it limits me with time. My time is out. So guys, I really appreciate your presence. Let's meet again on the next session. That is gonna held today midnight. Today midnight, we are pushing again technical analysis. This is how we analyze. So simple like that, guys. I really appreciate your presence. Let's meet midnight today. Good luck. Same link, but then I'll try to reshare the link and session details. Good luck.